Hello there, you're viewing the video version of the Pirls Stock Market Commentary featuring the proprietary bull bear point and figure market breadth summary chart for July 24th, 2016. Market breadth. With this past week's market advance, our bull bear point and figure ratio fell to 2.19 from 2.23 last week, maintaining its strongly bullish territory. The total count of securities in bullish or bearish patterns increased 1% to 3,100. The count of bearish stocks increased 3%, while the count of stocks in bullish patterns increased fractionally. The Pirls PNF Market Breadth Summary Chart shows us a market now 4 consecutive weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly email version of the Pirls Stock Market Commentary free of charge, simply enter your email address in the space provided. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 114 points for the 16th advance in 23 weeks. At a positive 585.15 points, it has risen above the March 2014 and April 2016 tops and continues above the remaining 4 tops above plus 100, as well as continuing above all 6 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 2 accumulation days and 2 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode, on lower average daily volume. Momentum. Now down to a positive 89.94 from a positive 125.9 a week ago, the CCI 20 daily continues outside the plus or minus 50 range required for a valid zero-line reject long entry signal in a Woody's uptrend begun last week. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 12 weeks ago, while the daily CCI 20 began a Woody's uptrend 1 week ago. The CCI 20 weekly rose from 190.80 from 167.1 last week after forming a zero-line reject long entry signal for Monday 7/11 open. We will follow the results of this trade simulation in next week's commentary. Industry rotation, the last 2 weeks. All of the top 5 industries are positive, and 4 of the bottom 5 are negative. Summary: brokers and some tech on top, precious metals, oil, and retail on the bottom. Bullish: brokers, computer hardware, and semis continue in the top 5. Oil and oil services continue in the bottom 5. Disk drives has left the bottom 5. Gold and silver has left the top 5 and has entered the bottom 5. REITs has left the bottom 5. Bearish: S&P retail has entered the bottom 5. Focus this week from www.zerohedge.com. Q3 EPS expectations just turned negative. 6 consecutive quarters of declining earnings. The following are some key points and charts. Most sell-side research had deeply slashed their EPS expectations, especially as we got closer. The blended earnings decline is still minus 3.7%, putting the quarter on pace for the fifth consecutive decline in earnings since Q3 2008 through Q3 2009. According to the latest weekly update from FactSet, as of this moment, consensus estimates now expect the third quarter to be the sixth consecutive quarter of declining earnings, with Q3 EPS forecasts just turning negative for the first time, down from a positive 0.4% to a minus 0.1%. At the start of the second quarter, consensus expected Q3 earnings to rebound more than 3% year over year. They are now negative, primarily on the back of the failure of energy earnings to rebound as the recovery in crude oil prices has not only stalled, but is once again declining, in line with what happened 1 year ago. And just how are companies expected to attain this lofty surge in earnings? Why on a surge in profit margins over the next few quarters to new all-time highs as companies supposedly slash pay and fire millions? Even as the Bureau of Labor Services dutifully follows the instructions from the administration and, quote, reports, end quote, of continued major job gains and rising wages. Because only under the most ludicrous propaganda narrative can a late cycle economy, one which is already the fourth longest, quote, recovery, end quote, in history, continue to see rising wages and continued job gains while corporate profit margins soar to record highs despite 3 consecutive years of declining revenues. Finally, for all those asking how the S&P 500 can be trading at all-time highs despite what now appears to be 6 consecutive quarters of earnings decline, we wish we had an answer. Thank you for tuning in for this week's Pirls Stock Market Commentary, featuring the proprietary bull-bear point and figure market breadth summary chart, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up, and, as always, wishing you true success.